Credit plays a major part in the financial decisions that we make, from buying a house to buying a car or even in renting an apartment. Having a low credit score could cause you to have unnecessarily high interest rates, or even worse, it could cause you to be denied for the loan that you're applying for. I know this firsthand personally because in college, I had a horrible credit score. I was in the 400s. And at that point in time, I made a lot of decisions that kept on pulling my score lower. It wasn't until I met the lady of my dreams that I started to learn about credit and how it works, and I started to apply strategies to help me raise my credit score to above 800 consistently. So in this video, we're going to be giving you guys the tips, tools, and strategies that we've used to maintain the 800 plus credit score so you can do it for yourself as well. Stay tuned.
Hi guys, I'm Tahseen.
And I'm John.
Welcome to our channel Millennial E.I.R.E, where we give practical tips on reaching financial independence and early retirement. If you've been liking our content so far, please hit the like button on our videos and the subscribe button, because we're on this journey to financial independence, but also to reach 1,000 subscribers by the end of the year. So hitting that subscribe button will really help us out.
Before we jump into these strategies, we just want to give you guys a quick breakdown of what a credit score is and how it works. So a credit score, long story short, is what a lender, an insurance company, or even in some cases a job will use to see how risky it is to do business with you. The higher the credit score, the less risky of a person you are. The lower the credit score, the more risky it is to do business with you. A credit score is affected by 5 different categories. These categories are payment history, credit utilization, credit age, account mix, and credit inquiries. As you can see, each of these categories are weighted differently and affect your credit score based on those rates.
So now that John has explained what credit is, how it works, we're going to jump right into the strategies that we've used to build his credit score and to maintain great credit scores of 800 plus. Strategy number 1 would be to know what your credit score is and routinely monitor it. This can be done by using services that your credit cards and even some of your bank accounts offer. And if you don't have a credit card or a bank account that offers the service, there are free services out there, free websites out there like creditkarma.com or Credit Sesame that you can check your credit score for free. Granted, it's not going to be a FICO score, but it can still give you an idea of where your score is. As you can see, credit score falls into a range on a spectrum. It goes from having bad credit to having excellent credit. So even if the credit score that they report to you is within 50 points of what your actual credit score is, it will at least give you an idea of what category of credit score you fall into.
The next very important strategy that we use is monitoring your credit report annually. So, in order to get a copy of your credit report for free, you can go to annualcreditreport.com as shown here, and it's also a link in the description below. And this is a website that allows you to get your full credit report once a year without any cost to you.
From the 3 bureaus.
From the 3 credit bureaus. And with that, a credit report is actually what's used to calculate your credit score. It has all the history of any debt you've had, all late payments you had, all your mortgages for the last 7 years is going to be on this report. So it's very important to make sure that you're aware of everything that's on there so you can stay current with all of your payments and all of your debts. Also, another thing that this credit report will have are things that have gone into collections. Now, this is a topic that can get very detailed, and we'll go into detail in another video on this topic even more. But some quick points to grab on this is that if you have something in collections, paying it off may not benefit your credit score directly. What you would need to do is have an agreement with the debtor that if you pay this loan off, that they're going to take it off your credit report completely. If they don't, it may not be beneficial to pay it off. But like we said, that's beyond the scope of this video, and we'll go more into detail in another video. What are you about to say, love?
Oh, I was going to say that paying off collections can actually hurt your credit score, depending how long it's been there. And so definitely don't pay collections unless you get it in writing that it will be taken off your credit report.
The next strategy that I've used in bringing up my credit score is getting a secure card. This is an awesome strategy if you're at the point where you have a really, really low credit score or no credit score at all, and you're not able to get other accounts like credit cards to help raise your credit. So the way a secure card works is that you will go to a bank that offers a secure card. You give them a deposit, which will be the maximum amount of the card that they'll provide for you, and then they'll give you a card. So for example, you'll go to a bank. In my case, it was Bank of America. I gave them a deposit of $200, and then they gave me a secure card for a maximum of $200. When they gave me this card, it functioned pretty much like a credit card. I would make charges on it, and then I would have to pay off those charges every month as things went along. And the benefit of this card is that it's still treated like a credit card to credit bureaus. So you're still building your credit score at this time. But it's just extra safety and security for the bank, because if you fail to pay your card, they can get that $200 deposit and use it towards your card. One thing to keep in mind as you're considering using one of these cards is making sure that the bank that you get a secure card with allows you to be able to upgrade that secure card to a true credit card after a certain amount of time. This will give you the benefit of being able to get a credit card without having to close an account for your secure card. And once you upgrade that secure card to the credit card, you'll get your initial deposit back.
The next strategy that you can use to help build your credit is to become an authorized user. You want to make sure that you become an authorized user on somebody's account that is responsible with their credit. Becoming an authorized user is when a primary account holder adds you onto their credit card as someone who is eligible to make charges or use their credit. And in this, you want to make sure that this is someone that is great with paying their bills on time, that they have a good credit utilization, and they have a good age of history. Because as you're added as an authorized user on their account, you now take on all the great things about their credit history with this card. This is something that I took full advantage of before I even knew how to say the word credit. My dad added me to one of his credit cards at the age of 4. And so I was gifted a great credit score by the time I was in college. And I was able to in turn help John build his credit by adding him onto my cards, which I'm not going to lie, I had selfish reasons because this is a man that I decided I wanted to marry one day. So it kind of helped me out to make sure that his credit was on par as well. And so as a parent, you can do this to help your children as well if you are responsible with your credit. So you want to make sure as the authorized user and the primary card holder that you're being as responsible with credit as possible. So as a primary card holder, you want to make sure that you are checking your account very regularly to make sure that your authorized user is not racking up payments that you can't afford, because you are the one that is liable for the debt, not the authorized user.
This next strategy is honestly one that we feel could go without saying, but we have to say it. Make sure, if all else fails, that you pay at least the minimum balance on all your debts across the board. As we showed you guys before, this is 35% of the weight of rating your credit score. So make sure you pay all of your minimum balances. And if something happens and you do happen to miss a payment, you're late on a payment, reach out to your lender and they may be willing to work with you. Everybody makes mistakes, everybody goes through hard times, and most lenders understand this. So we urge you guys to please take that initiative to reach out to your lender, to ask them if you can pay them immediately or set up a payment plan so you don't have to have your missed payment reported to the credit bureaus. The lenders usually report missed payments after 30 days of it being late to the credit bureaus. So if you can work out a deal before that, you can still maintain your credit score as you're trying to build.
The next strategy that we use to build our credit score and to maintain it is to never carry a balance on revolving credit. What revolving credit is credit that you have available at all times, and you use it as you need it and you pay it as you use it. So a credit card is one of the most common examples of this kind of credit. There's a myth that we've heard many people tell us that they think in order to build their credit, they need to carry a balance on their credit card. And this is 100% absolutely false. This is not something that will positively affect your credit. Credit utilization makes up 30% of your credit score. Credit utilization is the amount of credit that you use in relation to the amount of credit that you have available. So for example, if you have credit limits with all your credit cards that total $1,000 and you use $500 on it, and that's how much you have left on your credit card every month, that means that your credit utilization is 50%, which is very high, and this will negatively impact your credit score. And so this is why we recommend to not use your credit cards unless you have that money in your account to be able to pay it off at the end of the month every month. This not only will help with increasing your credit score, but this will also help with your road to financial independence, because it will prevent you from having to pay unnecessary interest rates on the money that you use on your credit cards.
The next strategy that we've used to help build our credit score is never closing an account unnecessarily. So there are some accounts that just have to close. For example, debts that you have. As you guys know, we paid off our car recently. That was a loan that once we finished paying, that account had to close. But there are accounts that you can have the choice to keep open. These are, for example, credit cards. So right now we have around 10 to 15 credit cards, and we only honestly utilize 3 or 4 of them at any given time. Why would we have all those other credit cards there? Well, the benefit of keeping those other credit cards is even if we don't use them, it's helping us build our credit history age. And the way credit history age works is that it takes an average of all of your accounts, and that becomes your credit history age. So let's say you have a credit card that you've had open for 10 years, and then you open one today. We're going to take the average of 10 years and this year, and then it's going to be 5 years. So your credit history at that point will be 5 years of age. This is the benefit of keeping your credit cards open even if you don't use them. You can even slash them up with a pair of scissors if you want to force yourself never to use them again. But closing those accounts will lower your credit history age, and that will have a negative effect on your credit score.
So these are the strategies that we use to build John's credit score to 800 plus, and that we use to maintain it there. And as you notice, there were 5 categories that contribute to your credit score, and all of the strategies that we use only account for about 3 of these categories. And that's because these 3 categories make up 80% of your credit score. And those are the only 3 categories that we focused on as we were building his credit. The other 2 categories, we thought it was worth just mentioning that 10% of your credit score is based on hard inquiries. And so you want to make sure that you're limiting the amount of inquiries that you have every year, meaning the amount of times that you apply for a loan. The other 10% is based on credit mix, meaning that you have more than one different type of debt. So a credit card and a mortgage and a car loan shows a diversification in credit mix. This doesn't mean that you need to go out there and get a loan just to get a better credit mix, because as you see, it only accounts for 10% of your score. As you're building your credit score, you'll have opportunities to get different types of loans. So that's not something that you need to focus on as you build your credit score.
And so with that, we hope that you guys really enjoyed this video. If you did, please hit that like button for us. And also, if you haven't already, please subscribe. As you guys know, we're hoping to be able to reach 1,000 subscribers by the end of the year, and we can't do it without you. So we thank you guys for all of your support so far, and hope that you keep on watching our videos and that we can keep on bringing you content that you love. Hope that you guys can build a great credit score, and we'll love to hear some of your stories. If there are any tips that you feel that would help others build their credit score, please leave it in the comments below. And until next time, see you guys.
See you.